I do want to discuss Bicycle specifically. We had the fundraise announcement a couple of months ago, I think it was.
A couple of weeks ago.
A couple of weeks ago.
Yeah.
Time flies.
Time does fly.
And my question to you is, it was mentioned as growth equity, and it's a $500 million vehicle. Can you talk to me about the focus, where it is specifically, and how you view that both from a stage and an insertion point?
The answer is very specific to Latin America as well. Mm-hmm. So there are a lot of really good early stage funds in Latin America. Some local, some foreign, but it's a solid base of early stage funding. And then crossover funds, once you get to the D or the pre-IPO round, they always show up. If a company has good numbers, they will show up. The gap is in the middle. So starting at the Series B, it's a bit of a desert in Latin America. For a few years there, from 2019 to 2021, it was not a desert. Yep. And in 2021, notably, venture went from something like $4.5 billion a year to $16 billion a year. Now it's back to less than $1.25 billion. So we're back to the 4.5. So there's a real gap in funding at the B and later. And the B tends to be the trickiest round because you need some meaningful amount of capital. The A can't lead the B. They could do maybe some pro rata in the B. So you really need someone to step in and lead the round and price the round. And there's still some risk in the business. That's the real opportunity. And then, of course, you get opportunistic stuff at the C and D at good prices, maybe some secondary here or there. So that's the gap that we want to fill with the fund. That's a product, so to speak, that founders don't have, and that's a product that LPs can't buy today, which is growth exposure in Latin America.
Can I ask, is the fund size big enough? If you think about a Series B being 40 million, say, 30, 40 million, and you want to lead a Series B, it's 25, 30 million check from you. Is that big enough? You've got 12 to 14 checks in the fund.
It's a start, right? We didn't have a lot of time. We had an idea of what we wanted to do. Yeah. I had a non-compete. Our non-compete was announced, the end of my non-compete was a couple of weeks from when we announced the fund. And to be quite honest, we haven't even fundraised yet, right? It's Mubadala, who wanted to make a bet in Latin America. And we've known Mubadala for a while, both Shu and myself. And then we called 5 other LPs. We made 5 phone calls, and the 5 of them said yes. And it was my family office. So we really haven't started. But what we want to make sure is this time around, we don't want to be the biggest. The biggest doesn't necessarily mean you're the best. We want to get started. I think 500 million, maybe a little more, is a good start. And then we'll see where it takes us. But I think we're lucky. I mean, we're grateful to be able to pick up the phone, call 6 people, and raise a fund, which is probably the largest first-time fund launched in Latin America. And I think in this time where nobody's raising money or very hard to raise money, to show up with a 500 million fund a couple of weeks after your non-compete expire, we're lucky. We're blessed. We're grateful. A lot more will come. I mean, we have big aspirations, but we need to deliver. You win a game playing minute by minute, and we got to deliver the first few minutes, which is this.
Can I ask, when you say the biggest isn't always the best, you deployed $7.5 to $10 billion. There were different numbers that I saw, so I'm not sure which one it was, but $7.5 to $10 billion. Sorry.
7.5 through the Latin American fund, and it was 2.5 billion through the other Latin American.
Okay, so combined we have a 10, but 7.5. With your time with SoftBank, what were some of the biggest lessons from that deployment period?
Different times, right? At that point in time in SoftBank, the mandate was to build a portfolio play. Right? I wanted to make sure that we were investing into most successful technology companies. That was the mandate of SoftBank. And I wouldn't call it unlimited capital, but we had a significant amount of capital. So that was our job to go deploy that. The Latin American Fund, Fund 1, is a very successful fund and will continue to be very successful because we were able to fund the best Latin American companies. This time, it's all about quality and not quantity because we have a different amount of capital available to us and because we need to make sure that the returns that we provide are absolutely the best. So we're a lot more cautious in terms of which companies we're going to invest and which founders we're going to back and how we're going to allocate our time. Because I do believe that we can add a lot to the course, to altering the course of a lot of the great businesses that are being funded in Latin America.
And that 12 to 14 that you mentioned of number of companies is a feature. It's not a bug. We want a small portfolio in the first fund. We want it to be personal with every single company. We'll only invest in companies that are excited to have us as investors. We're not fighting to get into rounds. If they don't want us, it's okay. We don't have to be in there. And so knowing that it's only going to be 10 to 14 is really clarifying because that means, an investment a quarter. So it has to be real mutual love to do that. And if it's not, it's okay.